artificial intelligence-related stocks are experiencing an incredible surge because companies such as Oracle and several other major technology players have recently revealed record-breaking levels of investment in artificial intelligence technologies. This wave of spending has caused the entire artificial intelligence sector to heat up, and as a result, most stocks in this space are now trading extremely close to their highest values ever recorded in stock market history. This surge reflects the growing belief that artificial intelligence will transform industries ranging from healthcare to finance, and investors are rushing to secure positions in companies that are poised to benefit from this trend. Despite this overall rally across the artificial intelligence sector, there is one very important name that is not fully participating in the upward trend. That company is ASML, which is the only business in the entire world that builds extreme ultraviolet lithography machines. These machines are a vital component in the production of the most advanced semiconductor chips on the planet. ASML plays an essential role in the worldwide semiconductor supply chain by supplying these enormous and expensive machines, which are worth tens of millions of dollars each, to major chip foundries such as Taiwan Semiconductor Manufacturing Company. These machines enable the creation of smaller, more powerful, and more efficient microchips, which are in turn necessary for driving innovation in artificial intelligence, data centers, smartphones, and advanced computing. Even though ASML stock has managed to climb by 17% since the beginning of this year, it is still performing well below its all-time record level. The stock is currently down by 26% from the highest price it achieved in July 2024. This indicates that the company has not yet met the extremely high expectations that investors had previously set. Many investors had assumed that ASML would be one of the strongest performers during the artificial intelligence boom because of its unique technology and monopoly in extreme ultraviolet lithography. However, the decline from its peak shows that challenges and uncertainties in the semiconductor market have weighed on its performance. ASML recently captured headlines once again because it decided to invest in Mistral Artificial Intelligence. This move mirrors the actions of other prominent technology giants such as Nvidia, which have been channeling funds into smaller artificial intelligence startups. ASML committed 1.3 billion euros in a Series C funding round to support Mistral Artificial Intelligence, which is a European-based artificial intelligence company. They will now work together to integrate artificial intelligence models across ASML's product lineup and to pursue joint research and development initiatives. These efforts are expected to strengthen ASML's technology and provide direct benefits to its customer base. The news of ASML's investment in Mistral Artificial Intelligence was received positively by the market, and the company's stock price moved higher during the past week. This response from investors has led to speculation about whether this development could be the beginning of a stronger performance for ASML in the future. Furthermore, Bank of America commented that the deal with Mistral Artificial Intelligence could increase ASML's valuation multiple, which means investors might be willing to pay a higher price relative to earnings because they see greater growth potential. However, ASML has been facing some significant challenges in recent quarters. The demand for its machines has been highly volatile, particularly in China, where shifting economic conditions and geopolitical tensions have created uncertainty. Despite these challenges, ASML has continued to emphasize strong demand linked to artificial intelligence applications. Unlike companies such as Nvidia, which designs chips, or Taiwan Semiconductor Manufacturing Company, ASML is part of a different part of the semiconductor cycle because it produces the equipment that other companies use to make chips. This unique position means that ASML's performance can be influenced by fluctuations in manufacturing investments and broader economic cycles rather than direct consumer demand for electronics or chips. During the second quarter, ASML delivered strong financial results. Revenue rose by 23% to 7.69 billion euros, and net income increased by 45% to 2.3 billion euros. Bookings for the quarter held steady at 5.5 billion euros, which suggests that while growth in new orders has paused, the company is still maintaining a solid level of incoming business. These numbers highlight ASML's resilience even amid challenging market conditions. Looking ahead to the rest of the year, ASML's management expects revenue growth to slow down compared to previous periods. They are predicting 15% revenue growth for the year 2025. For the longer term, specifically the year 2030, ASML continues to aim for revenue between 44 billion euros and 60 billion euros, with 52 billion euros as the midpoint of that range. This target would represent an increase from the 28.3 billion euros achieved in 2024 and would imply a compound annual growth rate of about 11% at the midpoint. While these figures are ambitious, they demonstrate ASML's confidence in the long-term demand for its technology. Even with its strong technological edge and dominant position in extreme ultraviolet lithography, ASML cannot fully control the broader demand cycles that influence the semiconductor industry. The company has acknowledged that its long-term forecasts could change because of economic and geopolitical uncertainties. ASML stated that fundamentals for its artificial intelligence customers remain strong looking ahead to 2026, but they also warned that the global economic environment and political developments introduce risks that could affect demand. The partnership with Mistral Artificial Intelligence is a strategic move that not only diversifies ASML's exposure to new growth areas, but also allows it to leverage its existing market power into another revenue stream. The artificial intelligence boom presents a long-term opportunity for ASML. The positive forces driving artificial intelligence adoption are encouraging, but short-term expectations for the company are more muted. Analysts currently predict that ASML's growth will be mostly flat for the second half of the current year, and they estimate only 4% growth in 2026. This means that investors may need to be patient before seeing significant gains, but it also suggests that expectations are low enough for ASML to potentially surprise to the upside. At present, ASML's shares are trading at a forward price to earnings ratio of approximately 30 based on current projections. This valuation is considered expensive for a company that is expected to deliver single-digit revenue growth in the near term. However, ASML's unmatched competitive advantage and critical role in the semiconductor supply chain make a strong case for holding onto the stock despite its higher valuation. For investors who are considering entering the stock, taking a small position in ASML could be a sensible strategy. The current expectations for the company are modest enough that if ASML outperforms predictions, its stock price could rise significantly. Over the longer horizon, if the artificial intelligence boom continues as many experts expect, ASML is very likely to become a key winner in this space, even if it has had a slower start compared to some of the other high-flying artificial intelligence stocks. Essentially, artificial intelligence stocks are reaching record highs because of massive investments from companies such as Oracle, but ASML, the only maker of extreme ultraviolet lithography machines used to produce advanced semiconductors, is lagging behind. Although ASML stock is up 17% this year, it remains 26% below its July 2024 peak, reflecting unmet expectations. The company invested 1.3 billion euros in Mistral Artificial Intelligence to collaborate on research and integrate artificial intelligence models into its products, a move that boosted investor confidence and led to upgrades from analysts. ASML reported strong second quarter results with revenue up 23% to 7.69 billion euros and net income rising 45% to 2.3 billion euros. But management expects slower 15% growth in 2025 and around 11% compound annual growth through 2030. While short-term growth forecasts are muted at 4% in 2026, ASML's competitive edge and exposure to the artificial intelligence boom suggest long-term potential, even as geopolitical and economic uncertainties create near-term risks. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.